We really see retail capital playing a larger role in allowing people to own the brands that they love. So that's really where the world is going, and we're just thrilled to be pushing it forward.
Welcome back to another episode of Tank Talks. I'm your host, Matt Cohen. On this week's episode, we're diving deep into the future of capital raising online with Rebecca Kacaba, co-founder and CEO of DealMaker. Rebecca is on a mission to make fundraising as easy as launching an online store, just like Shopify, but for capital markets. And today, we'll hear how her background in law and family entrepreneurship shaped DealMaker's unique approach and learn how they are using data, AI, and smart regulations to bring more people into the investing world. Rebecca and I discuss how DealMaker is transforming old-school fundraising into a fast, digital-first experience and the role of community building and marketing when it comes to successful capital raising campaigns. Next, we cover how changing laws like the Jobs Act helped level the playing field for everyday investors over the last decade, and some of her tips on how DealMaker is navigating global regulations while creating investor-friendly offerings. Lastly, we get Rebecca to open up about her experience and insights as a female CEO scaling a fintech startup in a historically male-dominated industry. Now let's jump into the tank for this week's episode with Rebecca Kacaba from DealMaker. Thanks for joining us in the tank today, Rebecca.
Thanks for having me. Excited to be here.
Yeah, Rebecca, obviously our audience in Canada probably knows a bit about you, but for our global listeners, it'd be great if you can give us a brief background on where you grew up, your family's entrepreneurial background, in particular your experience working in Kacaba Winery and how that impacted your career.
Yeah, so I come from an entrepreneurial family, was always helping my dad out in the early days, starting all his businesses, and then went into law and really fell in love with capital markets. I was a capital markets attorney for over a decade, and so really learned the ins and outs of that business and saw legislation changes and also saw not a lot of innovation and saw founders struggling with something. And so coming from that founder background, helping out family businesses, I was always really drawn to knowing the struggles of a founder and how hard of a job it is and wanting to help make their lives easier.
And what was the family background exactly?
A couple of different things, always one thing or another. My dad started a law firm and then he started a winery as well.
Okay. And how much time did you spend on the winery growing up, learning the ins and outs of that business?
Yeah, I used to do it a lot. I set up the initial retail store. I did cold calling. Doing wine sales is a lot of fun. Everyone's always drinking and enjoying the product while you're doing it. So that's great. And it was a very educational sale. People are excited to learn a lot about wine, and it's really a passion for people. So that really helped me understand that if you're going to do something, it's something you want to be passionate about the way I am about raising capital for people.
Absolutely. And last thing about the winery, a lot of people who probably want to open up a winery these days probably get the benefit of tasting all the products. That's one great thing. What's something people would not know about running a winery business that they would only learn after spending time in it like you did, that they should know maybe before they think about it?
A lot of people don't realize that it's farming at its core. You're a farmer. And then you're applying 5 different businesses on top of that because you're not just a farmer, so you're subject to the element, but you're also doing retail. You're also doing a highly legislated product. You're also doing everything else that an entrepreneur needs to do. So it's a lot of businesses packed in one.
I appreciate that. It's a fast track to an MBA for sure. So obviously taking the time you had working in capital markets, you came a bit of a frustrated consumer, I guess, working on the services side. And that led to the inspiration behind what you've been working on for the last several years called DealMaker. Tell us about the sort of starting of DealMaker and how your legal background influence the creation of the platform.
Seeing founders, having this difficult process with getting their companies funded, I saw an opportunity for technology to come in and really fix that problem for people. It didn't seem like a problem that they should have to deal with. Once they've gone out and they've pitched an investor and they've got an investor excited about what they're doing, everything process-wise should be able to operate more seamlessly. And so another big trend that we saw happening with the legislation changes was the opportunity for everyday people to buy into the brands that they love. And that really appealed to me as someone who was young and using social media and getting excited about, that was when Netflix was pivoting their business model to providing streaming services. And I was really excited about that. And I bought the stock early and I continued to buy and hold. The idea to me of the role that retail could play in being a part of the brands that people love was really, really exciting. And so we just saw an incredibly scalable opportunity there. I think a lot of people say, when they're looking at investments, you have to look at the total addressable market. For me, it was always about the opportunity of where's this going to be 5, 10 years down the road and how we can build a market around us. Because to me, offering everyday people the opportunity to invest in the brands that they love, I know that that's a macro trend that's just going to follow us as we provide more access.
And give us a sense of sort of time frame here, because this is sort of what Robinhood found in the public markets by demystifying investing in public stocks. You saw the same sort of situation happening, I guess, on the private side.
100%. I just had an amazing chat with Vlad about it last week. We're very much doing the exact same thing, right? He's done it for the public stock, giving access to everyday people. And the internet just has allowed people to learn about the financial markets. And so they can learn about all different topics and they want to participate. And why shouldn't they participate? They have so many gambling apps today. Why shouldn't people be allowed to invest in alts as well?
Absolutely. If we could only have the same sort of regulation around what we don't get to do in the private market side, but what they have in the regulated gaming industry or betting industry would be quite advantageous. I guess for you though, how did you think about disrupting the traditional fundraising market, and what did you want to do to set yourself apart from some of the other ideas that were maybe come before you?
For us, it's always been about listening and working really closely with our customers. I spend a lot of time with them listening to what their needs are, and then we build for them. And so for us, we've been able to fill a slot in the market where people are getting something out of the retail capital that they're not getting from other sources of capital. And so we never thought of it as disrupting other sources of capital because every source of capital has a ton of value. And there's lots of companies that need to get funded. It's more about bringing retail back to the capital stack the way it used to be, but I saw it fall away over the decades that I was in the capital markets, just with electronic trading and different things. Companies staying private longer really ended up pushing retail out of the role that it used to play.
Right. And, obviously that idea of helping the small mom and pops, the retail investor kind of is liking to the Shopify example, right? Of getting away from sort of the big box stores and helping the mom and pops compete with them with the tools and infrastructure support to get them online. You were doing the same thing for capital markets. So, as DealMaker is sort of described as a Shopify for capital markets, can you elaborate on that and what it means for your customers as well as the entrepreneurs that you work with?
Yeah, for us, the Shopify analogy is really about selling securities online can be done the same way you sell a pair of shoes. And so that's what today's consumer expect. They expect a really sleek online buying experience. Doesn't matter to them that we have to go through a bunch of validation, background checks, all kinds of things to make sure these things are safe. At the end of the day, they're buying a product, and we want to make that as seamless and easy and white labeled as possible. So when we do the Green Bay Packers offering, they've got a big brand. They have one of the biggest brands in the world. They want to set that up on a Shopify-like store, have the Green Bay brand first, and have their fans come in and have an experience that they expect from a brand like Green Bay.
Now, buying a pair of shoes on Shopify with Shopify Pay or one-click checkout is a little different than investing $25,000, $50,000 into a private company where you hopefully get shares in it. There's a lot of different regulatory things that you have to jump over hoops for. So can you explain how DealMaker maybe democratizes a lot of that friction that often goes along with purchasing investments in private companies?
Yeah, for sure. I mean, for one thing, depends who you are if you can invest $50,000 or $100,000, right? There's regulations depending on net income levels of how much money you can put into a single business, because everybody knows in the investment world with alts, that's how you keep a balanced portfolio. You're going to deploy a little bit in a lot of different types of offerings. And so our platform helps the legislation be embodied in that so that people can quickly validate who they are, different things, and then make sure they're compliant with the legislation.
Now, you also help people who are not accredited investors. Is that correct?
That's correct. Everyday Americans.
How does that work exactly? Because obviously there's a lot of regulation around this, especially in the US and in Canada as well. How did your time in capital markets help you navigate things? And what sort of hurdles did you have to overcome to even get access or allow access for non-accredited investors to use DealMaker?
Yeah, the American legislation is really clear. This is really what Congress envisioned as a more balanced capital market when they came up with the Jobs Act 10 years ago, where they said, look, we know companies are staying private longer. We know the capital markets need more different types of capital in them. And so we're going to make it possible for everyday Americans, regardless of how much money they have, to build their net worth through privates and alts. And we're just going to cap the amount that they can invest. Now, they're not capped to the amount they can spend on a gambling website, but they are capped in a regulated investment environment. And so that's what our technology helps to enable. And it's really US based. The Canadian legislation is not as clear about how you can digitally market things. I'm hoping that it will become, because I think it's a great opportunity for people to build their net worth and to try out investing. And I think in today's day and age, in 2024, to prohibit people from making investments where the biggest gains are realized because they don't have enough income is incredibly unfair. And if the general public knew this, it would be incredible outcries and really disruptive to say, just because you don't make enough money, you can't have access to some types of investments.
Yeah. So for our listeners who are a bit younger, I remember the Jobs Act coming out when I was living in the States. Obviously, you did as well, working at capital markets. Can you explain exactly what it says and how it changed legislation and basically started the business model for DealMaker?
Yeah, it basically said when you want to invest in private companies, you used to have to be accredited. So you used to have a base net worth or assets that are up over the $1 million range, or you have to be making over $250,000 a year, or combined with your spouse, $350,000. And it said, if you don't meet those thresholds, you can still invest, but we want to make sure that you're not going to lose your house by betting it all on a company that's super early stage and might blow up. So we're going to make sure that you invest less than $10,000 a year. And as those regulations have been in place, the exemptions and the amount of money companies have been allowed to raise this way have continued to increase, because the ecosystem is working. The ecosystem is building, where we're seeing bigger and bigger brands come into the space. You saw Substack do this as part of their recent Series B. You saw one of the UK portals, Crowdcube, backed one of the biggest startups in Europe now, and you've got 433 individual investors who made over 400x returns. Now, those are still paper returns right now. That company is still private, but there are some real success stories emerging from the space that are saying, look, people do seem to understand how to do this and how to be judicious in the way that they do it. And so we're going to continue to permit this kind of space to grow.
That's amazing. Yeah, I remember there was a company that helped going public, like IPO US companies, save a small allocation of the IPO allocation for retail investors to get access to those shares. And it was a huge rage for a while, but the business model didn't really work at the end of the day, because obviously the way that the bankers make their money is through the IPOs. So talk to us a little bit about how the platform works from a utilization standpoint between the issuers and the investors.
We just saw Reddit do it as a part of their IPO. They reserved part of their IPO for the users. We were really excited to see that. You've got some really exciting companies like Mercury Bank, Picasso, who are doing this as well. I totally hear you. Some business models can really benefit from this. One of the business models that we've seen struggle is with those scooters, right? And so the free bikes or scooters around a town, there's been a lot of competition in that space. And part of what inviting retail into the cap stack does is help a company block out competition and ensure loyalty from our users. And you can layer all kinds of perks on top of that. So that's the kind of business model where they should really be thinking about something of this, again, to complement different types of capital that they might have, so that they can really beat out the competition and develop a really loyal user base. And what our platform does is essentially allow a company to take investment direct from retail, so no intermediary. If you look at the big brands today, everyone needs that one-to-one relationship with their consumer, right? Taylor Swift has a crazy fandom today because she understands her fans very well, and she gives them what they want, and she keeps them engaged with planting little kernels for them to work on and figure out, or creating all kinds of viral things that are happening with her fandom. And so every business can do that, and they can leverage social media, and they can get a huge group of followers going that can help propel the business forward. If they're smart about how they're building their business, that's how they can accelerate to that.
And so, how are you exactly helping them manage that community aspect when raising capital through DealMaker?
We have a digital checkout process. We have a portal where they can communicate with their fan base, essentially like a private Reddit forum where they can be posting updates and videos and making asks. And so, really, just facilitating that communication between the fandom and the company.
And so, marketing obviously is a part of this, and it's a huge part of the successful fundraisers, kind of like a Kickstarter in a way, in terms of how the programs and the platform interwork with each other. How does DealMaker assist in the marketing side of it? And explain how like your business model benefits from like more marketing happening on the platform is good for your revenue.
We're working typically with like Series A and beyond brands. So companies that have some revenue, they have an established brand profile already. And so when they want to expand their retail audience, they want to do digital ad spend because they see the benefit for the brand as well. So a lot of folks now going to portals for earlier stage round, build up a bit of a community, test out some messaging strategies. And then when they have a digital community already and they want to set up their own online shop, they come to DealMaker.
Now, how does like a Series A or a Series B company work with DealMaker when there's like a lead investor? There's different types of securities being issued. How does your platform handle like a safe versus a preferred share versus a convertible note and the different securities being offered?
Very easy. We leave that up to the companies so that they can set up the offering in the way that it makes sense to them. Typically, they're doing a retail round in between different types of other capital stack rounds. So EnergyX, we just closed $75 million round for them. They did retail round, then they did institutional round led by General Motors Ventures, then they did further retail rounds. They just closed up a second one. So they've raised over $100 million of blended different types of capital.
And $75 million US was raised on the platform?
Through DealMaker in that round, yes.
Through DealMaker.
Yeah.
No, that's fantastic. Amazing story. How are you using AI, I guess, and how do you see it impacting the future of fundraising with, DealMaker and the future of what it could do?
Yeah, it's interesting. I just posted on LinkedIn from an event I was at last night. If any CEO doesn't have an AI strategy, expect to be irrelevant 5 years down the road, because I really do believe that. And it's something that I'm really excited about. The DealMaker team is incredibly excited about, because for our business, where there's a lot of complexity, we can use generative AI to really scale and solve that complexity, whether it's in creation of marketing materials easier and faster, whether it's reading the data that's coming in on what people are responding to on campaigns and then auto tweaking them. That's exactly a use case for generative AI where we can deploy our platform to more and more people.
Rebecca, explain to us how, in the public world, if there's a company that's raising capital, they can't say anything. Maybe it's a blackout period. Maybe they're under sort of like an SEC sort of like no discussion framework. How does it work in your world for our listeners who don't understand in the private markets when a company is fundraising? What can or can they not say?
They can say certain things within the marketing rules, and everything that they're saying has to be tied back to a full disclosure document, which is very similar to a prospectus. And that disclosure document is always available to the investors to read so that they have full information. And it's really nice for the space that things are templated as well, so that investors can get really easy and used to where to look for that kind of information. We are also working with public companies who are using this in a similar strategy where they're raising money while they're public because they want more retail in the stock and they want more interest in that. And the marketing piece just plays a nice component with the IR.
Interesting. So on the public side, I assume these are small cap companies who typically would work with smaller brokers. Is that correct?
Yeah, and sometimes bankers will bring us in. They'll be running an institutional component of the round, and they'll say, we'd like to add a retail component to this.
Oh, that's interesting. And that's kind of a natural A/B test of what does better in a way, right? Have you noticed any interesting dynamics play out when raising money for a public vehicle, but doing it on the retail side versus what they're trying to do on the institutional side? Like, have you outperformed?
We haven't necessarily tracked it. I think people coming into a round are always happier when there's more money coming in. And so I think it's always been a very natural complement. We did see a boost in the stock price for one company by 46% as we launched campaigns and messaging. And you just get some really crisp communication out there about what kind of milestones the company's hitting and what they're doing. And people love to hear about that.
Super impressive. Great case studies to look for as well for the future. Explain a little bit, if you can, about the fee structure and how it sort of provides a better cost advantage over traditional fundraising methods. And maybe explain how like the business model of DealMaker works, giving that I believe there's non-recurring revenue and then there's long-term revenue associated with the business.
Large component of our fees are transaction-based. So we ride with the companies in terms of if they're successful in raising capital, it's better for us. We do have some setup and monthly hosting costs in terms of getting the campaign up and running. And those are asset creation generally that companies are going to benefit from anyways, due diligence reports, all that kind of stuff that it takes to get an offering set up. And then once the companies are done, they use the communication portal as well as the transfer agent services to manage the community that they've built. And the way we really look at that is blending those components to give investors the best experience possible.
Yeah, I was going to say kind of like a investor relations portal, kind of what Q4 does or Irwin or something like that can be done with you, but you're at the beginning of the journey rather than when they jump in after the company's already public, right?
Yeah, and really with functionality that's specialized to having a large amount of retail investors. What we found when we were looking at the landscape was that it's very specific needs that the retail investor and the company have that we can help to facilitate and supercharge that relationship in a way that no one else was doing.
All right, switching gears here, who have been some of the most influential advisors or mentors for you as you become a first-time founder working in the tech industry?
I've had so much support from so many people. I always say never be afraid to ask questions. And whenever I ask for help, I've always been so amazed and thankful at the number of people that have reached out and supported us. So tough to name names in terms of how many people who have supported in getting me on this journey, but Tom Muir has been a longtime advisor to us. Mike Wessinger just recently joined as a recent investor and advisor. I'm really thankful for that. And we've got some more new and exciting names coming.
And so maybe I'll flip it back in terms of like going back, 10 years or so when the Jobs Act was coming out. What do you wish you knew then that you've learned now after running DealMaker for so many years to maybe have changed the course of which you would have either learned faster, made mistakes sooner, that you would tell your younger self?
We had an intention to go into the US market very quickly. It's a bigger market. It's next door neighbor when you live in Toronto. We did that about 2 years in. Very happy that we did that. We did that really quickly. And I know that was the right move for us and really what led us to the hyper growth that we accomplished. And so other than that, I think it's really about not seeing your failures. Really, I don't see failure as a word. It's just testing different bets and understanding what's working and leaning into what's working. And if you can keep focused on that, and really for me, it's about kind of paring down the bets now as we enter our growth acceleration phase and making sure that we're focused on the things that are producing the most for the business.
Now, I guess I should have asked this in the beginning. Does DealMaker eat its own dog food?
Of course, every time.
So how has that worked for you in terms of your own fundraising story?
Yeah, it's been great. I mean, my philosophy, even from day one, was take small checks from the large number of people, make sure that my capital was strategic. So they were putting deals on the system. And that helped get us to revenue faster than we otherwise would have if we were just knocking on doors.
Right. So would DealMaker use DealMaker itself for its next big growth equity financing round, in your opinion? Or you can't say?
Yeah, for sure.
I love that. That's fantastic. All right. And lastly, before we hop into our fast favorites, what are some of the exciting developments that we can expect to see in the coming years? What do you think DealMaker's impact will be on, the Canadian startup scene, the global, capital markets world, and where do you hope to be in the next few years?
We really see retail capital playing a larger role in allowing people to own the brands that they love. So you're watching your favorite TV show and you get a QR code to scan to invest in season 2. You walk into your favorite team stadium. there's a QR code stand where you can scan to become an owner and get to have some say in the players who get traded and when the new stadium gets built. That's really where the world is going, and we're just thrilled to be pushing it forward.
That's interesting. We had a founder on our show a while ago running a collectibles platform called Rally Asset Management. I think it was called Rally. And they have basically, have you heard of it?
Yeah, of course.
Yeah, exactly. So it was doing that in the collectible space, and you're buying like units or shares in the Michael Jordan rookie card or some beautiful collectible, old Porsche car or something like that. And it was exactly that. It was democratizing and then giving people small little bits of access to owning parts of their favorite collectibles, childhood toys, or their favorite sports teams. I got to ask you a fun question then. If you could invest in one team or one TV show, what would it be?
Oh, wow. That's a good question.
My wife would absolutely say nobody wants this. Right now, she's obsessed with it, and it's hilarious. So that would be and they just announced season 2. So I think she would invest in that. What would you say for you?
Well, I can tell you at the Robinhood conference last week, we asked a question on what's the company that you wish that you could have gotten access to earlier. And 46% of people said SpaceX, and then 15% of people said OpenAI, and then the rest were some really funny ones, including Chick-fil-A.
That's actually awesome. Or like OnlyFans or something like that. I'm sure that would pop up.
Oh, yeah. Oh, OnlyFans for sure. I think that might be mine. I think that's a brilliant disruptive business model that's changing the world.
The economics on that model is just insane. I think the numbers that blew my mind the most was like the revenue per employee.
Oh my God. Don't even tell me. What is it?
I think they had like 32 employees. It was like 30 million.
I mean, I'm proud of our revenue per employee, but that's crazy.
Yeah. They only have like 60 or something employees. I don't know. And they're doing like, billion of revenue. Yeah, it's pretty crazy. All right. Before we wrap things up, we always ask our guests for their fast favorites. So first off, your favorite podcast?
Tank Talks, obviously.
No, come on. Give me another.
All In.
Nice. Who's your favorite bestie?
Chamath.
Chamath. Nice. Next is your favorite newsletter or blog?
Morning Brew.
Oh, nice. We've had Austin on the podcast. That's great.
Love Austin.
Yeah, he's great. Favorite tech gadget?
My iPhone. I'm on it all the time.
Nice. Favorite new trend?
Democratization of capital. Am I allowed to say that?
Absolutely. Of course you are. And favorite book?
I'm in the middle of Elon Musk's bio, so I got to say that one.
Okay. And what are your thoughts so far, halfway through?
Very cool. You can skip through the childhood part. It's a little bit drier and jump to the good stuff.
Okay. Appreciate that update. And last but not least, your favorite life lesson?
Failure is not a thing.
Nice.
There is no failure.
There is no failure in life. Awesome. Well, thanks for joining us for the Tank today with Rebecca Kacaba from DealMaker.
Thank you.
Hey everyone, thanks for tuning in to another episode of Tank Talks. We hope you found today's conversation as insightful as we did. If you're enjoying the show, we've got 3 quick things to ask of you. First, hit that subscribe button on your favorite podcast platform so you never miss an episode, whether that's Apple Podcasts, Spotify, Google Podcasts, or YouTube. Next, follow us and stay up to date on upcoming episodes and behind-the-scenes content on social media with Twitter, LinkedIn, and Instagram. And lastly, share the love. If you found value in today's episode, share with a friend or colleague who'd benefit too. Your support helps us bring in more amazing guests and keeps the Tank Talks engine running. That's it for today. Until next time, keep disrupting and innovating.